Is this what a billion-dollar startup looks like? The backers of online luxury retailer Farfetch seem to think so. The London-based company is the latest UK startup to attract a big-name Silicon Valley investor, raising $86 million in its latest funding round, led by early Facebook backer Yuri Milner, at a valuation of $1 billion. The company acts as a marketplace for luxury boutiques, providing an e-commerce site for companies that can't. It says that focusing on this high-end segment of fashion separates it from other e-commerce businesses like Amazon or eBay.
Other marketplaces out there that are more mass market, they actually are absolutely huge in terms of fashion. So their fashion segment is very, very large. And compared to our business, they're multiple times larger than us. Where we specialize is in the high-end luxury segment of fashion. And I always use the comparison, think about these marketplaces. What is their equivalent in the physical world? Do you think the luxury brands would stock those retailers? Probably not. And that's the reason why probably this part of the market hasn't been an area where they've been particularly successful. But obviously the market is moving, so we'll see what happens.
For some, this will be further evidence of frothiness in the market and the emergence of a new dot-com bubble. But for investors assessing tech companies, it's all about the future.
I spent a lot of time talking to venture capitalists and analysts, and they tend to see technology companies in two different categories. There's the ones that are trying to build out their audience as fast as they can. You're looking at social networking groups like Facebook and Twitter, and today Snapchat. What they're trying to do is get millions, hundreds of millions, even billions onto their service, and then, in their parlance, monetize them at some point later on. It's to do with potential really there. Then there are companies which are building a digital element onto traditional structures. Farfetch is essentially a retailer. It's a high-end retailer, and it has a very nice website, but it will still be judged on things that stores have been judged on for decades, revenues, sales, and margins. And it's, in some ways, would be better to look at those companies with more traditional valuations.
Elizabeth Patton, who until recently covered the luxury sector for the FT, says the other challenge for Farfetch is that while no company has yet come to dominate the luxury sector, when big fashion brands do decide to jump in, it will pose big questions for the startup.
So when an investor looks at a company like Farfetch, they're not really going to be interested in profits, but what they are interested in is driving revenues. So top-line growth is essential. And that puts pressure on these companies, especially when they've delivered lofty promises like moving into emerging markets. And ultimately, this is a business which is entirely focused on brand equity. How do you scale up brand equity when that's the reason people are parting with $500 rather than $200? And I think lastly, the big issue facing companies like Farfetch and Lyst is at the moment they're providing a marketplace and a service. But what happens when the brands themselves finally decide to come into the business? And ultimately luxury, for all the hype around brands like Net-a-Porter, for all the m-commerce boom speculation, it's still a very underpenetrated market. And so one day, when the big brands decide to come in, who knows what space that leaves for Farfetch to grow.
Farfetch is the latest London tech startup to get a big vote of confidence from US investors. While some will be wondering whether this is the marking of a second internet bubble, they will be hoping that they can use that money to build a long-term sustainable business model. Ravi Mattu, Financial Times, London.